It's time for us, Dhirendra, to look at our hold or sell segment. Well, Winston Suresh has written in, Dhirendra. He tells us he's 45 years old. He currently lives and works in Dubai. He's been investing through SIPs and STPs in India. And he tells us the value of his money is appreciated 11% so far, and he's quite pleased with it. Now, he tells us that he has a home loan of about 14 lakh rupees, but he really wants a portfolio that will give him aggressive returns in the long term. He sent us a list of the funds he's invested in. Now, his total portfolio is valued at about 13 lakh rupees. He wants to know if it makes sense to hold on to all of these funds. Would you like to prune his portfolio or add more funds to his portfolio? Right on top of his list are the HDFC Top 200 and the HDFC Equity. Does it make sense to hold on to both of them? One of them is not aggressive.
No, I think, both funds are struggling right now, but he should certainly not have both the funds. He should drop HDFC Top 200. And just retain his position in HDFC Equity.
Well, also on his list, Dhirendra, is the ICICI Prudential Focused Blue Chip Fund. Now, this again is a large cap fund. While it's a good performer for someone looking at aggressive returns over the long term, does it make sense for him?
It clearly, it is aggressive to the extent that, it is a focused fund. It invests in limited number of stocks. But the way, it is tilted, it is by design a large cap fund. And it has done very well for now.
Here's the ICICI Prudential US Blue Chip Equity Fund, Dhirendra. This is an international fund and it's also such a strong performer. Would you recommend he continue this investment?
Yes, this fund has done very well. But I would once again say that this fund is also not an aggressive fund. If he is actually trying to bet aggressively on US stocks, then better option will be something like Nasdaq 100 or Franklin's US Opportunity Fund, because this is a fund, US Blue Chip Fund is invested into fairly established companies, large caps and consumer companies dominantly.
Next on his list, the DSP BlackRock Equity Fund, Dhirendra. Is this the best option for him within that space, looking at an equity fund? Would you like him to continue this investment?
No, this is a fund which is worth selling because, these funds are struggling for a while. So I would say that I don't find a reason today to recommend this fund. Next
on his list is the UTI Opportunities Fund, Dhirendra. This is an impressive fund. Would you like him to continue this investment?
Yes, this has been an impressive fund and it continues to be an impressive fund.
SBI Emerging Businesses, Dhirendra, this made your list among the top funds to invest in 2014. So I'm going to assume for someone looking for aggressive returns, you're going to tell him to continue this investment as well. For
an aggressive portfolio or a fund from which you expect aggressive return, this fund fits the bill. But let me tell you that, this expectation you should remind yourself that there is a downside to it. When it falls big time, and that is something which you should be prepared for. And if such a fund actually goes wrong, it tends to be far more disappointing than the kind of fund which you own right now.
Well, last on his list is the Reliance Pharma Fund, Dhirendra. Now, this fund has been a good performer, but would you recommend someone with a long-term horizon look at something so specific?
No, it's generally avoidable because, looking at his scale of portfolio, the way it is diversified and the way he has chosen fund, I think he'll do well to avoid any sectoral fund, any thematic fund. Of course, we have given the recommendation in terms of what to drop from his portfolio, but he will do well, by tracking or replicating his portfolio to our aggressive growth portfolio.
All right, so our aggressive growth portfolio is on your screen right now. It suits someone with your specific need, but also Dhirendra has told you what to hold on to and what to sell in your portfolio if you'd like to stick with that portfolio that you already have. We have time for a couple of more questions. Satish has written in from Dubai. He tells us he has an equity investment of up to 10 lakh rupees. He pays $300 US on his unit-linked term plan from Zurich Life Insurance. He began investing $1,000 US in the Friends Provident Fund. Dhirendra, this is from a global organization. He invested in August 2010. It's now come down to only $300 and he's very disappointed. He wants to know now, for his own retirement and his children's education, if it makes more sense for him to just invest in India. And if so, where would you like him to invest that money?
First and foremost, if this Friends Provident is a mandatory requirement that your employer must deduct your provident fund and it must get invested somewhere, then you don't have a choice. Otherwise, if it is a discretionary saving, then you can well consider India as your destination. But more importantly, when you are investing, you should be diversifying as much as possible. You should not be investing at one go, and make sure that the cost of getting your money managed or investing your money You should understand that, and it should not be beyond a point. In India, the expenses are very well regulated. The maximum which a fund can charge on an equity fund could well go up to 3%. So keep an eye on cost, invest regularly, and diversify as much. And these principles, whether you are investing in India or whether you are investing in your own country, where you are working, these things are worth keeping an eye on all the time.
All right, it's worth keeping an eye on. And Dhirendra, if he were to invest in India for his long-term horizon, which of our portfolios would you recommend he takes a look at?
Entirely depends on, he's 38-year-old and he has a lot of time on hand. And assuming that, he's going to invest for next 10-15 years, he can consider one of the two options that we have, aggressive or growth portfolio.
On your screen right now, our aggressive and our growth portfolios. Write back to us if you have any more questions about the advice you heard on the show. I'm going to take one very quick question. Zachariah Matthews has written in Dhirendra. He's an NRI as well. He tells us he has a trading account and he trades in shares and gold. He wants to know if there's a way that he can buy a silver ETF. First of all, Dhirendra, does a silver ETF exist? And does it make sense for him to be buying silver in this market?
No, there is no option. There is no way he can invest in a silver ETF. No such thing available in India. And I don't think, individual investors should look at, allocating a part of it to gold or silver, because there was a time, gold gained prominence because for 5 years there was a bull run, and now we see that correcting steadily. And I don't see an investment logic for this to be part of one's allocation.